Christoph, just looking at the future, what is the regulatory pipeline for fund distribution?
Well, regulation is a never-ending story in fund distribution, and by 2020, virtually all major territories where funds are distributed will have introduced regulation to better align interest for the end customer. And most will be through some form of prohibition on having the asset manager allocate retrocession to distributors, as evidenced in the UK Retail Distribution Review, or RDR, and in the MiFID II proposal. This will increase the pressures of transparency on asset manager and will have a substantial impact on the cost structure of the industry. It will also impact the business model of distribution. Implemented in the UK in December 2012, RDR was designed to end the potential conflict of interest that arose when investors use independent financial advisors to source funds. RDR is now spreading, particularly in Europe, and MiFID II has similar regulation as in RDR. But also in other regions, versions of RDR have already been created in India, Australia, and are in the process of being created in Switzerland, Germany, Italy, and South Africa. We believe that by 2020, RDR or similar regulation on fee model and the related disclosure and transparency will apply to most of the major markets, including Asia. MiFID II also introduced a ban on inducement in event of independent advice and for discretionary portfolio management, and on transparency on fees. It also requires retail investors to seek advice when looking to access any complex financial instruments, which according to ESMA guidance would include some UCITS, mainly structured UCITS and all non-UCITS. The other piece of regulation impacting the industry is called PRIPS, and it's on the horizon. It introduced key information documents called KITs for packaged retail and insurance-based investment products. So it's called PRIPS regulation. The KIT is similar, but not identical to the UCITS KIT. It is true that it will make it easier for retail investors to be able to understand the key features and risk of retail investment products and to compare different PRIPS, making a more informed decision on whether an investment product is appropriate for them or not. PRIPS will become applicable from 31st December 2016, but UCITS will not be subject to the regulation for another 3 years after that. So there is still a bit of time to prepare for this regulation, particularly for those which have a UCITS product, and these products are not sold through a wrapper.
Thanks, Christoph. So Sarah, big picture, what will fund distribution look like in 2020?
I guess there are a few things to consider here. The first thing is what actually happened in the period up to 2020, and a lot of what we've talked about already around whether NPPRs stay or don't. As Suzanne said, the jury is out on that one, and the latest we've heard on it has indicated that there won't be an automatic disbanding of NPPRs, even if respective third country has been granted a passport. This could be really problematic if there's a coexistence of the 3 years of both regimes operating at once. For example, it would allow US managers to accept assets under NPPR, but they wouldn't have to comply with all the AIFMD requirements that EU-based funds would have to comply with. This wouldn't really be a very level playing field. Second thing to think about is that our research has shown that there'll be 4 distinct regional fund distribution blocks in terms of cross-border distribution. These are North Asia, South Asia, Latin America, and Europe. Our research has also shown that as these blocks form and get much stronger, they're going to develop much more regulatory and trade linkages with each other, and this could really change the way that asset managers view distribution channels. The third thing is that by 2020, there will be a much more considered approach, I think, in terms of where funds actually are distributed. The cost and other regulatory aspects of having a scattergun approach to distribution and registering in many, many locations is going to become much more problematic, and I think decisions will be made on how profitable each channel is going to be and what investor channels that each fund will actually sell in.
Thanks, Sarah.